It's dark outside. It threatens to rain in Johannesburg. It's been very, very unusual weather in this part of the world. But today we're talking commodities, and there are also dark clouds in parts of the world about the commodities outlook. And we've got here the CEO of Metmar, and he's going to talk us through the issues that they have been seeing in commodities trading. Dave, thanks very much indeed for joining us this morning.
Pleasure, Godfrey.
Can we just begin by talking about some of the issues that we've been seeing in your trading? Now, you source raw materials from sub-Saharan Africa for export essentially to the rest of the world.
Correct.
What have you been seeing?
Well, the calendar year 2009, I think, has been the worst year that I've seen in the 30 years that I've been in this business. And from absolute demand, and 120% of everyone's production was demanded by everyone to an almost zero sort of pullback to zero demand has been an absolute nightmare for producers locally and internationally. We have, however, seen in the last quarter of 2009 that demand is coming back. Prices have certainly increased. They've come off the bottoms, and we think we're past the worst. A lot of the demand is coming from China. There is less excitement in the traditional markets of Europe and USA. And we'll see if this Chinese demand continues and follows through. You know, we've got Chinese New Year around the corner, and that has generally been a slower period and a more cautious period, and people generally wait until after the Chinese New Year, and once we've got past that, we'll see whether this thing follows through after that. That's, I think, the biggest thing to watch.
Yeah, I think those signals are quite consistent, because we also saw a trading update today from Richmond, and they were talking about their growth coming from China, coming from Asia. They spoke of Asia, so I suppose that would include China. But in the US, the sales were actually down. So I suppose it's pretty consistent, the picture. But then we're also getting these mixed signals out of China. We saw last week they clamped down on credit, and at the same time, we saw the numbers suggesting the economy is growing extremely strongly.
Well, they're predicting the economy to grow at a minimum 11% for 2010, and that is off a pretty large base.
Absolutely.
And the one thing you cannot stop is the urbanization of the Chinese rural people. They will continue with that. And with that development, they need the commodities, they need the metals, and they need the infrastructural commodities that are required to house these people.
So it's pretty hot in there. What are you feeding into them?
We are, we're busy with quite a lot of chrome ore. We're busy with some tin concentrates. We're busy with a number of raw materials from this part of the world, and we have certainly seen demand pick up. We have seen a lot more people in the market looking for availability of materials.
And where would you say that demand particularly has been stronger in terms of the raw materials that you supply?
It's all metals across the board. It's right across the board. It's the non-ferrous and the ferrous metals across the board. Those are the ones that we're essentially involved with.
And at the same time, we have seen Europe. I remember I did history some years ago. In fact, I wouldn't want to say decades ago, but it would have been decades ago. And I remember people talking about Germany as the sick man of Europe. And now we've got a whole continent that's sick. I mean, if you go in Eastern Europe, there's no growth, virtually no growth there. You then talk about the problems that we've seen coming out of Greece, coming out of Ireland, coming out of Spain. There's really no immediate growth coming out of Europe.
We've found Europe to be painstakingly slower than we've seen in Asia, for example, and that's a sign that things are not well. We're not seeing the same flow of commodity. If we look at figures from 2008, we look at figures 2009. And then we have a look at what has happened in Asia in terms of the sort of uptick in the tonnages and the demand that we are seeing from Asia. We have not seen the same from Europe.
Dave, a quick take for you, your outlook for commodities that you're dealing in for 2010?
I think we're past the worst. We're past the worst in terms of consumption has been at its low, and we believe that we've turned the corner. We'd like to see some follow-through after the Chinese New Year. We'd like to see this demand that we've seen in the last 2 or 3 months continue into the second quarter of 2010. And then I think we can be reasonably bullish that things we are going to look up. I think we're going to see a much slower growth in price and demand. It's not going to be this feeding frenzy we experienced in 2007, 2008. But steady growth is actually better for everyone's planning and everything else.